Exchanges of non-monetary assets, right? So I give you a truck for a truck. I give you a building for a truck, right? Non-monetary exchanges. There's no money changing hands. So the basic rule is that the exchange must be based on the fair value of the asset given up or the fair value of the asset received, whichever is more clearly evident, right? Whichever is more clearly determinable. The rules for gain loss recognition depend upon whether the non-monetary exchange has commercial substance. So commercial substance, essentially just meaning like, is this in the course of our business, right? Let's move onward. If the future cash flows change as a result of the non-monetary exchange, the transaction has commercial substance. So basically, if we're exchanging, one $20,000 truck for another $20,000 truck, it does not have commercial substance, right? Nothing really changed. But if because of this, we're giving up a truck for a building and all of a sudden we're using that building and making a bunch more money, then this exchange has commercial substance. That's going to be a big phrase that we'll see with this chapter. Determine whether the risk, timing, and amount of cash flows arising for the asset received is different from the cash flows associated with the outbound asset. So how much money is this truck making you versus the building that you gave up, or vice versa. Evaluate whether cash flows are affected with the exchange versus without the exchange. Different ways to evaluate if there is commercial substance in our exchange of non-monetary assets. All right. Well, in each type of exchange, right? This one has commercial substance. This one lacks commercial substance. How do we account for the asset received? Well, we recognize it at fair value. If there's no commercial substance, we recognize it at the book value of the asset given up. This is something to memorize, just be familiar with here, right? And then how do we account for any gain or loss recognized during this transaction? Because it's quite unlikely that it will be exactly a $20,000 truck for something that's $20,000 also. There's probably going to be one a little bit more valuable than the other. Well, if there's no commercial substance, no gain or loss is recognized. It's not really changing your value, right? You're not really changing your cash flows in the future. So there's nothing to recognize there. But if there is commercial substance, we will recognize gain or loss.